Good morning, trading world. It is March 16th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. I'm up really early this morning. It's 6:57 a.m. on the East Coast. Let's get to it. The title for today's outlook is I expect data drops to continue to keep pressure on the banks as the ECB steps out before the Fed. There are plenty of data drops to watch this morning. Some are more important ones. Some of the more important ones will be the European side of the market. ECB stepping out ahead of the Fed at 9:15 a.m. this morning to announce their changes to their interest rate policy. Then at 8:30 a.m., there will be a gauntlet of reports. Starting, we have the housing starts, import-export prices, and jobless claims all take place at that 8:30 a.m. hour. Some important things to take note of are that we came into the week with a 11-point plus or minus expected move to start the week. We're down to the last two trading days, and we still have a 7-point plus left on the expected move for the week. What this means is that either Thursday or Friday will be super volatile, if not both. Let's look at it on the chart. Coming in, this is where we started the week, Monday. The black line represents the previous close, which is basically where we start the week. The purple line here represents the upper edge of the expected move, and the purple line here represents the lower edge of the expected move. And as you can see, from Monday all the way till now, we've basically gone nowhere on the week, which means somewhere in these last 2 days, we're going to move to strike or touch the upper edge of the expected move or the lower edge of the expected move, if not violate it, because I'm expecting a very strong move. Looking at strength and breadth, there's a lot of energy building for an upside bounce. The question is if we get another flush lower sooner or later. It's not if it will happen, but when, because there is definitely a pullback coming based on the weekly and daily chart alignment. Friday deserves a lot of attention because of a triple witching happening. There will be a lot of gamma risk on Friday due to the large amount of open interest having to be closed or rolled. Get ready. It will probably happen one of two ways. We could possibly see another huge gap down followed by consolidation and a huge takeoff to the upside all on Friday. The second way it could play out is a flat to slight up open on Friday, and after pushing up into resistance, the bottom will drop out of the market in the middle of the day, followed by a strong V-shaped bottom. Seeing something like that would tell me that the market isn't quite ready to let go yet, and we possibly see a bounce that could last a month or so. That brings us into the key levels of the day. All right, here we are with the key levels of the day. Starting on the support side, we have our jack support at 386 to the 385 area, which is going to be really pertinent today. And if you notice, this is where we pretty much started the week. Then we have our queen support 384 to the 383 area, and then king support 381 down to the 378 area. On the resistance side, we have our jack resistance at 389 to the 390 area, queen resistance 391 to the 392 area, and king resistance 393 all the way up to the 395 area. The main thesis for today is bearish, closing below the 389.28 with a projected target low of between 388 and 382. The alternate thesis is bullish, closing above the 389.28 with a projected target high of between 389 and 395. The main channel we are in is from 397 down to 379. The main channel below that is 379 down to 364. Yesterday, market strengthened better, gap down big, remained range bound for most of the day, and late in the day pushed the highs of the range. I expect strength to open flat on the day and continue consolidation build for a big jump up coming soon. We have harmony between the technical side, which is bearish, and the quant side, which is also bearish. Remember what I said about consolidation on the larger time frame scales. As you can see, this coincides with the volatility box, as we are basically running up and down, running in place over a large range, basically stacking up open interest for a big breakout at some point. This brings us to the situations or scenarios of the day. All right, here we are with the first and most probable scenario, which is going to be our expanded range day structure. We could begin the day with consolidation to the upside. At some point, after pushing up and tiring out into resistance, we break lower. That is our expanded range day structure, and what makes it our expanded range day structure is that we spend time with prominent closes both above and below the previous close represented by the blue line. All right, here we are with the second scenario, our rounded reversal day type structure. Excuse me, I'm having some technical issues with my drawing tools here. But the second scenario, rounded reversal day type structure, we could get a continued push higher toward the jack or queen resistance area, find midday chop around either the possible queen or king resistance before going back down with the same energy or force we went up with the first part of the day. Also, we want to be on alert for the vice versa alert, and that simply states we get a continued push lower off the cash open, looking something like this, where we find our midday chop around either the queen or king support area, and then we simply go back up the second part of the day with the same amount of force or energy that we came down with. So that is our rounded reversal day type structure. All right. I am having some supreme issues with my recording software. It is jumping around and doing all kind of stuff, and things won't stay in place. So I'm going to wrap this video up. The last scenario is going to be our trend day down, meaning we would open gap down, start with a push back toward the previous close represented by the blue line, and then get into our trend day down. We usually find midday chop around either the possible queen or king support area. And usually we have start the second half of the day looking to continue that primary trend, but most of the time it turns into a head fake and we get some type of rally back up into the close. There is also a vice versa alert on this as well, because we're close to being at a point where news could come out right before the open and put us in a gap up situation, and that gap up situation would be a vice versa alert, and it would look like this: gap up, we would come back or fade after the cash open back into the previous close, find support there, and get into our trend up. Find our midday chop around either the possible queen or king resistance area, possible head fake up, and then get into our fade going into the close. So that is the last scenario. I hope you got the second one, which was the rounded reversal day type structure. I hope this helps. Hopefully I can get these technical issues sorted out, but be very, very careful, because we're sitting on a powder keg that could blow either way. We could get a super bounce going and started, or we could get another flush, which will happen. It's just a matter of when, whether it happens before we get into the bounce good, or some point in the middle of the bounce. But you want to be very, very careful. I hope this helps. And as I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. That'll do it for this morning's pre-market. Wishing you a positive trading day. Let's go out and make it a great one.